The story of Alibaba.com begins in a small apartment in Hangzhou with a blackboard, a few folding chairs, and a simple dream: make it easy for small businesses to sell to the world. In early 1999, a former English teacher named Jack Ma gathered 17 friends and colleagues and said, in plain words, that the internet could open factory doors in China to buyers everywhere. They registered a company and built a basic website where makers could list products and importers could send inquiries. It was called Alibaba.com, a name people could spell and remember in many languages. Within months, venture money arrived, first from Goldman Sachs and then from SoftBank, not because the site looked fancy but because the idea felt inevitable: a digital bazaar for the world's small and medium suppliers. The early product was simple: company profiles, product photos, and a "Contact Supplier" button. The magic was cultural. Salespeople in small factories could answer buyers at midnight. Buyers in faraway ports could compare quotes without long trips or middlemen. As internet use spread, the listing pages filled with textiles, hardware, toys, and machine parts. The team added categories, improved search, and created paid memberships so serious exporters could stand out. In those years, Made in China was changing from a cheap joke to a new reality. Alibaba.com became the place where that change was visible, in real time, line by line. Growth brought copycats and skepticism. Many asked, can strangers trust each other across oceans? The answer came from small fixers that felt big to a first-time trader. The platform introduced things like verified supplier badges, escrow-style protection, later branded trade assurance, dispute processes, and standardized RFQs so a buyer could describe needs once and receive many quotes. None of this was perfect. All of it reduced fear. Each step pulled offline trade habits, samples, deposits, inspections, into a web flow people could understand. Over time, send inquiry felt less like a risk and more like a routine. Meanwhile, the company around Alibaba.com grew. Domestic marketplaces like Taobao and Tmall rose for Chinese shoppers, and payment rails like Alipay made checkout feel safe. But Alibaba.com kept its original job: cross-border B2B. It remained the front door for millions of small suppliers who would never rent a booth at a global trade fair. When Alibaba Group listed in New York in 2014, headlines focused on consumer commerce. Yet the quieter B2B engine was still there, sending quotes to buyers and leads to export workshops each day. A new chapter began in 2023, when the group reorganized into distinct business units under 1+6+N model. The international arm, Alibaba International Digital Commerce, AIDC, clustered businesses like Alibaba.com, AliExpress, Lazada, Trendyol and others under focused leadership, with the mandate to grow outside China and run faster. The aim was clarity: let each unit make decisions like an owner, and report real progress in its own lane. Through 2024-2025, the numbers showed that shift. AIDC posted strong, steady growth. In one quarter it delivered about 22% year-over-year revenue growth to roughly RMB 33.6 billion, driven largely by cross-border commerce. Group filings said the unit was narrowing losses and pushing toward profitability, helped by operational discipline. Later updates highlighted double-digit growth in international retail as well, with AliExpress and peers contributing, but the message for Alibaba.com users was simple: international commerce was a priority again. What made Alibaba.com endure was not a single, killer feature, but a pattern of small, trade-friendly choices. The site kept refining supplier verification and on-platform messaging so buyer and seller could build a thread of trust. It invested in search quality so a specific part, say, M8 stainless hex bolt DIN 933, returned real factories, not random spam. It improved logistics integrations and inspection options so a first order could move with fewer surprises. And it used paid memberships and tools to nudge suppliers toward better photography, faster response times, and clearer terms. These unglamorous details are a big reason the marketplace still connects millions of inquiries each year. Inside this steady climb sits a living thought, woven into the journey rather than pinned on a slide. Its first strength is scale with intent. Alibaba.com has, for years, aggregated vast supply across industrial categories, from textiles to machinery, so a buyer can sample the world's factory floor from a laptop. That breadth creates network effects. The more serious buyers arrive, the more capable suppliers invest in better storefronts, which attract more buyers again. This is reinforced by the larger group's reach in payments, logistics partners, and data. Recent disclosures show the international segment's momentum and management's focus on making it sustainably profitable, signs that the platform's backbone remains strategic, not ornamental. Its second strength is habit. Thousands of procurement managers and founders start their sourcing on Alibaba.com because they know the workflow: shortlist, message, sample, negotiate, pay with protection. Even when final orders move off platform, as repeat business often does, the search and discovery habit tends to start there. That first mile power matters. A third strength is learning. 25 years of chat logs, dispute records, and shipment outcomes teach a marketplace where fraud hides, how lead times slip, and what terms reduce risk. That learning shows up quietly in policy tweaks, better filters, and nudges that push new users toward safer choices. But the platform has weaknesses that came bundled with its success. Because anyone can list, noise is constant, duplicative catalogs, uneven quality, and generic photos that look the same. Many buyers still struggle with sampling fatigue and vendor selection. Because many first orders are small and margins thin, there is always tension over platform fees, payment protection costs, and dispute handling. And because repeat sourcing often shifts to email or WhatsApp, the marketplace can lose visibility into lifetime value, which tempers how much service it can afford to provide for free. The challenges grew sharper in the 2020s. The world became more protectionist, shipping costs spiked and fell, sanctions and compliance rules multiplied, supply chains rerouted around geopolitics and pandemics. Rivals appeared on every flank, domestic B2B platforms in many countries, niche directories for specific industries, and social, video commerce where buyers DM suppliers directly. Even within the group, priorities had to be balanced among consumer marketplaces, cloud, logistics, and international bets. In 2023 to 2025, the company reshuffled leadership, split and recombined business lines, and reset strategies to compete with fast-rising challenges like PDD, Temu in cross-border retail. Through all this, Alibaba.com's task remained old-fashioned: get two businesses to find each other and agree on terms. Yet the opportunity side is still huge. Small manufacturers from Asia to Eastern Europe to Latin America want stable export channels. Small brands worldwide want reliable, customizable supply. Digital trade continues to lower search and transaction costs for SMEs, especially when platforms help with trust, payments, and logistics. For a marketplace already thick with supply, the next leg of growth is less about more listings and more about better matches, using data, ratings, and AI assistants to reduce wasted conversations and surface the right factory faster. In parallel, the broader group's push into international commerce and AI underscores where investment oxygen is flowing. Key statistics help anchor this tale without breaking its flow. The group says its international commerce has been growing at double-digit rates, with AIDC quarterly revenue reaching the mid-RMB 30 billions and management signaling a path to profitability for the international segment. Recent quarters also reported international retail revenue around RMB 28 billion, up approximately 10% year-over-year, driven by cross-border demand. These are group-level lenses, but they show the river in which Alibaba.com flows. Cross-border trade is alive, and the company is leaning into it. Of course, there are threats. Trust is fragile. A few bad experiences can sour a buyer on the entire marketplace. Compliance is costly. New rules on product safety, ESG reporting, and data privacy raise the bar for sellers and for platforms that list them. Competition is clever. Some rivals skip directories and go straight to social graphs, where short videos and live demos compress discovery. And macro cycles are brutal. When consumer demand dips in destination markets, inquiries slow, and export workshops feel the chill. How did Alibaba.com respond? Mostly by doubling down on the boring levers that keep trade moving. It kept enhancing verification and trade assurance so first orders felt safer. It tuned search and category taxonomies so buyers could filter by certifications, MOQ, lead time, and factory audits. It built more content around sourcing playbooks, how to spec a hoodie, how to QC a valve, so new buyers wasted fewer samples. Within AIDC, leaders emphasized operational efficiency, cut low-value subsidies, improve unit economics, and focus on categories and regions where cross-border demand is durable. In public updates, executives linked this discipline to a simple goal: a profitable, expanding international commerce business. Read as one flowing thought, the platform's position looks like this. Strengths in supply breadth, buyer habit, and accumulated trust tools. A parent group that still sees international commerce as a growth engine, and data that can make matching smarter each year. Weaknesses in catalog noise, uneven seller quality, leakage of repeat orders off platform, and the constant struggle to prove value beyond the first deal. Opportunities in AI-assisted sourcing, verified private label programs, bundled logistics, inspection services, and expansion of non-China supply so buyers can diversify risk. Threats from protectionism, compliance costs, copycat vendors, social, video sourcing shortcuts, and macro slowdowns that starve SMEs of orders. Behind these business lines sits a founder story that still whispers lessons to entrepreneurs. Start with an undeniable pain. Alibaba.com began with a simple gap. Small factories had products but no doorway to global buyers. Small buyers had needs but no easy way to compare factories. Solve that, even clumsily at first, and value accrues. Design the trust, not just the page. A directory is a list, a marketplace is process. Badges, escrow, verification, fair dispute paths. These are not add-ons, they are the product when strangers trade. Let the smallest unit teach you. The real user is not the whole market, it is one buyer trying to spec one order with one supplier. Every feature should shave time, doubt, or waste from that triangle. Own the boring edges. Sample logistics, compliance checklists, HS codes, packaging specs, these do not win headlines, but they win repeat business. If your marketplace handles the dull parts well, the lively parts take care of themselves. Keep the platform neutral but not passive. A marketplace should not play favorites, yet it should push its network toward better behavior, clearer photos, honest MOQs, realistic lead times. Gentle pressure creates a healthier pond. Expect reinvention at platform scale. The group's 2023 to 2025 restructuring shows that even giants must redraw org charts to regain speed. If the environment changes, fix structure first, then product. Accept that some value will leak, and still be valuable. In B2B, repeat orders often move off platform. The answer is not to fight gravity with locks, it is to remain the best first mile engine for discovery and the best guide for safer first orders. If you own the first hello, you will own many hellos. And remember that numbers are loud, but trust is louder. AIDC's growth figures matter because they fund better tooling for SMEs. But the real health of Alibaba.com is heard when a new buyer messages a new supplier without fear, and when both return after the first deal. So the story of Alibaba.com, told in one thread, runs like this. A teacher in Hangzhou gathers friends and builds a small website so small factories can talk to the world. The site grows by adding guardrails for trust and tools for matching, while the larger company blooms into many marketplaces and then reorganizes to run faster abroad. Competitors rise, rules tighten, and trade shifts, but the B2B bazaar keeps doing its humble job, turning strangers into partners, one inquiry at a time. Its strengths live in scale, habit, and learned trust. Its weaknesses in noise and leakage. Its opportunities in AI-guided sourcing and better services. Its threats in protectionism and smarter rivals. And the lesson for builders is steady and clear. If you want to change commerce, do not chase glamour, chase friction. Remove a little of it each day, protect the first transaction fiercely, and let the world's small businesses do the rest.